Welcome back. You're watching us here on Halftime Report. We've been speaking about the equity markets through and through, but let's talk about our special segment, which is called Fund Race, where we're joined by Sridhar Sankararaman of Multiples Alternate Asset Management. Their private equity platform manages assets for almost $3 billion USD assets under management, with a couple of listed and a few unlisted investments as well. The most notable of them, I can see there is Dream 11, there's Quantifi. You had investments in Delivery and IEX, which you've exited, and then there are Genie Mode, Montra Electric, Mo Engage, etc. as well. Sridhar, thank you so much for joining in. It's your second conversation with us. The first time you said that you back companies which have consumer love or brand love. Now that, since then to now, sentiment has changed. Things have, gotten a lot more cheaper or a lot more worse when it comes to growth, whichever way you cut it. What are the current challenges, opportunities, and the valuation environment? How are you looking at all of this from your lens?
Sure. Thanks, Mangalam, for having me here again. And I'm glad you have a great memory. See, for us, we are looking to take bets which are fairly long-term, right? 5, 6, 7 year bets. So the near-term doesn't change our long-term thesis in any significant way. I would say this is a great year for private equity because the last couple of years, capital markets was a real option for even companies which were not really ready for an IPO. But now the fact that things have corrected, I would see a lot more action on the private side. But to just quickly comment on the companies that you read out, the one common theme you will see in these companies that they are all new age businesses. Yeah. So as Multiples, we took a very early call to invest in technology about 12 years ago. And our underlying theme was to say there'll be a lot of value created by new age businesses. If you think about the listed ones today, new economy businesses, there'll be about 20 of them which are listed with a market cap of 100 billion. That's 3.5% of our overall market cap. The way I see this, in the next 10 years, Mangalam, this will be 15 to 20% of market cap. So it's a large value to be created by tech businesses. And we were the first private equity fund to start investing in tech businesses 10 years ago, right? And that's something that we will continue to do. So we've invested maybe about $400 million in these companies, already taken out more than $1 billion. And this is only with exits from 3 of these companies, or 3 or 4 of these companies. So we see huge potential here. So these are the kind of companies that we would want to continue to go for.
Now, Sridhar, good afternoon. And you mentioned you take a 5 to 7 year opportunity, right? Where is that next 5 to 7 year opportunity? Because you hear a lot on the street that B is the next A or Y is the next X. Where is that opportunity, that next 2,000, 10,000, multiple crore opportunity that you are finding?
So 2, 3 things are changing, right? One is, for the first time, we are seeing that consumers are becoming a lot more open to pay for subscription in India. I mean, we would hear this for the longest time that, people are not okay to pay for subscription, OTT. But if you look at the numbers of even people like Sony Live today on what is the kind of subscription revenue, something is changing. Quick commerce, we're all paying for delivery now. Something is changing. There is a lot of subscription-led businesses, which we see that naturally comes with affluence. Is one large opportunity. The second large opportunity is India B. And India B is not really, I'm not talking about Gorakhpur here, I'm also talking about Govandi, right? I mean, India B is also within our, within our big cities. And the products and services for India B will be different than products and services for India A. So that's, again, the next big, because they have just about started the discretionary consumption curve. So these are 2 large areas on the consumption side. In addition to this, on B2B as well, we are seeing opportunities where we are focusing our time on businesses which are not just buy and sell, but where can you add some value and create some serious modes. So we basically look at opportunities in 3 buckets. One is a new age businesses, which is about 10 investments that we've done and fairly successfully, which are tech led. And India being India, you will see a lot of these tech businesses keep allowing you to either create a new economic opportunity or challenge an existing opportunity. And if you're disrupting an existing market, your ability to grow faster than the market rate is much higher, which has clearly been our experience. The second bucket is classic growth. And the third bucket is buyout. So we are also seeing a lot of families were earlier not willing to sell their businesses. But in the last 2 years, we've evaluated about 20 buyout transactions. Just evaluated. The fact that so many deals even came to us tells you that something is changing. Families are a lot more open at 2 things. One, to professionalize management. And they believe that they need a change agent to do that. And a private equity fund can be that change agent. And the fact that the next generation is saying, Papa, I may not necessarily want to run this business. And so therefore, that's a big shift. The fact that shareholder and manager could be different, which has always been the case in the West, is now beginning to happen in India. So these are opportunities that we're seeing.
You spoke about exits and how you have a 5 to 7 year horizon, etc. Exits are now getting pushed down the road, a little more difficult. How are you navigating through that? Because I remember a lot of PEs who had lined up IPOs, and you said that not companies which were even ready for IPO were going IPOs.
Yeah.
It gets a lot more difficult, right? And the other part that you spoke about, people paying for convenience. It has been shown so far that, you know, the expected addressable market out there was not as big as the actual addressable market. So I'd written this thing called, we're not a TAM market, we're an ARM market. You have to look at the actual addressable market. So what are your thoughts on that and exits on the whole?
So I'll take the exit question first, Mangalam. There's a very vibrant P2P secondary market, which is now emerged. So if you look at it, it's not just capital markets as an exit window, but also private equity to private equity. And the amount of dry powder there is in this country is fairly substantial. So that, so I think there is a lot of action there as far as exits is concerned, and also strategic, right? In the sense, private, I mean, you know, there are companies which are owned by private equity funds which are being purchased by strategic businesses. On the question on you know, where is the TAM? It's a very valid question. So we are really looking at businesses where you know there is a particular serviceable addressable market. We are not taking bets where you have to believe that this will happen, but we already have indications. I'll just give you an example, right? When we invested in delivery, e-commerce was picking up. We looked at a lot of front-end e-com businesses. We could never build conviction on who will make money and how. That was our thesis on saying that the guy at the back who's really delivering the parcel wins irrespective of whoever is winning in the front. At that time, delivery was making money on a per parcel basis, even though overall, you know, sort of they were in loss making. But the fact that the opportunity was visible, the macro was visible, is absolutely the call that you need to take. There has to be a path to profitability.
Sorry to cut you there.
Sure.
You've made your money in delivery.
Yeah.
Shareholders haven't. If you look at it from the IPO price, the post-listing high to now, even now there is so much supply in the market, and fundamentals haven't kept pace with what other parts of the market have done. So that was what I wanted to understand. I mean, good on your fund that you guys exited with a fair amount of multiple, but and you know, when you speak about the listed space, the new age businesses turning from 3.5% to almost 10 to 15%, are there any opportunities in listed space which give you that sort of upside potential? Because, you know, from a retail investor standpoint, they can't get access to deals much before them being public.
Yeah. So Mangalam, as you know, we don't do public investments. So we are largely focused on the private side, and you know, and our return expectations are of course very different than that of a public market investment. Therefore, so I'll not be able to give you a prognosis on which are the stocks to track. But I would say that there is enough and more proof of concept of people having made money on tech-led businesses on the private side. It's just all about the stage that you invest in, and if you hold businesses for fairly long periods of time, I mean, kind of Zomato is a great case in point. They are now close to a $20 billion business, right? So I think three things that really matter is the founder agile? Because I think businesses are getting built and disrupted very quickly. The concept of build to last is something that is being challenged every day. Right. So you need to look at businesses which have very, very strong founders, very agile, you know, markets with very strong profit pool and clear path to profitability. I think if there are these three fundamentals are in place, I don't see why the value will not get created over long periods of time.
You know, Sridhar, just one final question. You know, is there? You spoke of opportunities, right? With the recent shift in market sentiment that you've seen over the last 6-7 months, have there been any asset that you were looking at earlier has now become more reasonable and you are eyeing those now?
Absolutely. So, you know, as I speak, there are at least a couple of opportunities that we're looking at where expectations of both the founder and maybe incumbent investors have become a lot more realistic. The bid-ask spread has kind of reduced. So I'll give you an example. On the consumer side, the last 2 years, the number of deals that we looked at, the actual deals that got done, only a third of the deals actually got done. Okay. Because A, the growth did not come, and B, the bid-ask spread was very, very high. Right. I think that is something that I'm seeing that could likely change in the next few quarters.
Any specific categories?
Wait and watch this space for more action, Mangalam.
All right, I will do that. And just off the cuff, you have investments in Dream 11, right?
We have exited that as well.
You exited that. How much did those ads cost? You're not going to tell us. All right, what we'll do is we'll take a short break on that note. On the other side, we'll focus on Trump tariffs' impact on IT sector and what brokerages are saying about that, because it's been the sector that has been on a rout over the last couple of trading sessions. Fair amount of value eroded out there. Keep an eye.